It's really funny. If you would have taken my call 2 or 3 months ago, I probably would have saved you $3 or $4 million by now. And that was my first client.
No way.
Yeah.
So like for the Waldorf Astoria, like how many policies are there? Is it like 4 or like 500? I just don't know.
There's like upwards of 40.
Whoa, that is brain surgery. That's a lot. So then like something happens, and then there's also like finger pointing on like who actually covers what happened. Where do you think we are now going forward? Like if I'm buying a multifamily deal today, should I be underwriting flat, kind of down for an existing multifamily property?
I think.
All right, Fred Zutel, thank you for taking the time.
Thanks for having me.
Absolutely. So you're a partner and the president of Lockton's Florida division. I know you because you literally, for me, insure all my clients and I think every building in Florida. I call someone, I'm like, yeah, we're working with Fred. So I appreciate you taking the time.
No, thanks for having me. I appreciate it very much.
I didn't know this, but Lockton is the largest privately held and independently owned insurance brokerage in the world?
Yes. So we have a pretty big presence in Florida, but our firm was actually founded in Kansas City by a gentleman named Jack Lockton, who unfortunately passed away. But his son and the family still own the company, and we're the only sort of global broker in the top 10 that's privately held and independently owned.
Can you explain sort of privately held and independently owned? Just like, so privately held is, it's not a public company. I get that.
That's right.
Can't buy shares in it.
Yeah.
Right? And then independently owned means what exactly?
Well, independently owned means that we have no outside shareholders or outside debt.
Wow.
Right. So in many businesses, certainly in the insurance brokerage business, private equity can play a big role in making management decisions, in making decisions that aren't necessarily always in the best interest of clients, of the people that work there, et cetera.
Yeah.
So we're focused, solely on sort of being the best insurance brokers, being the best place to work, and providing the best service to our clients.
That's wild. And it's the biggest one in the world, and it's private and it's independently owned.
Yeah. And we're going to stay that way.
It's incredible. So Lockton family probably does pretty well for themselves. And you too, you're a partner.
Wait. Everything is great.
I can imagine. Okay. So I actually don't know much of your history. So I'm curious. I'm assuming you weren't born saying, I can't wait to insure buildings. So I'm curious how you got started, but before that, I don't even know kind of where you're from. Are you a Miami guy or?
So I actually, my name is Federico, not Fred.
Wow.
I was born in Argentina, in Buenos Aires, and I moved to Miami when I was like 9 months old. Oh, okay. My dad did a lot of different things. He had a bicycle shop. He was a taxi driver. At one point he owned a restaurant, and that restaurant burned down.
Whoa.
At that point in time, he decided he was tired with living in Argentina. He moved to the U.S., and then my sister, my mom, and myself followed about 9 months after.
Nice. And you moved to Miami?
Yeah.
Where were you, just out of curiosity?
My dad came to Miami with like $1,500 in his pocket. So we lived in Hialeah.
No. Okay. Wait, sorry to cut you off. Daniel De La Vega, the president of One Sotheby's, was just on. He was the last guest, and he was like raised in Hialeah. I didn't know that either.
Yeah. I mean, we moved around a lot.
Right. But like started in Hialeah.
Yeah.
That's crazy. Okay. And then, so you're in Hialeah and you did high school and college in Miami or?
Yeah. I've been in Miami my whole life since. I went to college in Miami. I went to graduate school in Miami, FIU and UM. And I love this place.
Yeah.
I've been here since. I'm not leaving.
Very similar story for me. When I've had the opportunities, professional or educational opportunities to leave, I'm like, why would I leave a place that I love so much? Yeah. So did you go to college to do insurance?
No. I mean, I think that would be weird. So yeah. This was like a crazy sort of accidental journey for me.
No way.
Yeah.
Okay. So how did it start?
I guess it started in 1992 because my dad, he started a company that sold cell phones, right? And cell phones in 1992 were a little different than they are today. Yeah. And he did okay. And, we had some upward mobility and moved, it's sort of like that American dream story and kind of moved up in the world a little bit. But, when I was 16 or 17, I decided I really didn't want to work with my dad. So I took a job cleaning toilets at a grocery store.
Wow.
And, so ever since I was like 15, I've basically worked, right? So I did that for a little while. I then decided I didn't want to do that for the rest of my life. And as soon as I turned 18, got a job working at a computer store as a cashier. I was really bad at that. So they then made me a salesperson. And at the time, this is crazy, right? Computers were expensive. It's like 2003, 2004, it was like $4,000, $5,000, $6,000. And we were earning commission on it. That was a pretty cool job. And then one day they changed the way they paid all their salespeople. And this is as I was starting college and doing all that. So I went to another company that was selling expensive TVs and high-end audio equipment. And this is when a TV was like $40,000.
Yeah, they've gone down. It's crazy.
Yeah, and people would buy, it was like the boom, right? 04, 05, 06, the sort of previous boom in Miami, right? And so people were buying 4 or 5 of these things. I met some super interesting people. And then one day that company decides that they're going to try to sell themselves and merge with another company. And the first thing they did was cut all the salespeople's pay.
Oh, wow.
So I was going to college. I was working weekends, working afternoons and nights, that kind of stuff. And, I realized I did not want to sort of take a step back. So I called my best friend, and his dad at the time owned a company that sold nails and screws. So I went from selling really expensive TVs, and speakers to very wealthy people to sort of selling nails and screws. And it was the first time in 20 years I kind of went back to Hialeah.
But you were in college at the time too?
Yeah, all throughout college.
You were selling nails and screws?
Yeah.
Oh my God. Okay. So you're a hustler. I love this. Okay.
I don't know. I'm just,
but you were working
just trying to figure it out, man.
Yeah, exactly.
Yeah. So, that was a super interesting job and really hard, because, if you think about insurance or, even high-end audio equipment or, home automation, those are specialties, right? Yeah. And if you think about like a 50-pound box of nails, that's a commodity, and I think what was interesting about it to me and something that I still think about a lot is like, how do you turn a commodity and make it into a specialty? Right. And I think that's what I try to do every day. I don't think what we do is commoditized. I think a lot of people try to commoditize it, or buyers, some of them view it as a commodity.
Yeah.
Or even some of the people that are selling it view it that way. But I think there's a lot of, value that can be added in any industry by taking a commodity.
Yeah.
And turning it into a specialty.
It's funny you say that, like in me selling land and multifamily properties, same thing, right? Like people think, oh, it's just a broker. You hire them and they just go out there and talk to a bunch of people. And it's like, no, like the relationship we've built actually help and add value, to the process and to you.
So basically to kind of finish the story. So for 2 or 3 or 4 years that I did this while I was graduating college, going to college and going to school and working hard, and trying to be the best, nail and screw salesperson in South Florida. Things were going pretty well. And then, the world sort of ends, right? Because it's 2008, 2009. You had clients that were buying, like truckloads of nails every week that went from buying, entire containers of these things to nothing, right? Like literally less than 1 box. It was insane. Crazy. And, around that time, my best friend's dad, my boss, decided that he was going to sell his company. So he exited, and the new company that came in, drastically changed the way that they paid everybody, and sort of the outlook looked pretty bleak.
Yeah.
So what I did is I called a guy that I had previously sold some speakers to.
Okay.
And I just graduated college at this point. And, it was in 2009. And, he was the president of an insurance agency in Miami. So that's how I started insurance.
No way.
Yeah.
So wait, you just had the idea to call, because I'm assuming you sold like a speaker to him, and you like either got along with him, saw that he was like pretty well off or something like that. And you're like, let me reach out and see if he can help me or something like that.
Yeah. My thought process was as follows. And again, like I have no idea what I'm doing, right? So,
fresh out of college. Like,
yeah. And also like, sort of first generation,
same.
Didn't have a lot of guidance in terms of how that whole process worked, but, obviously just trying hard.
Yeah.
My thought process was as follows. I couldn't be a stockbroker because nobody was going to trust me with 10 or 20 or $30 million or however much money, for a 23-year-old. I couldn't be a realtor because nobody was selling, houses at the time, right? This is 08, 09. It was like the worst market, in recent history or ever. Yeah. Depending on who you ask. I didn't really have like the sort of skills or interest in sort of taking a desk job.
Yeah.
And so it occurred to me that this was something that everybody needs and not everyone understands. And I had this idea that if I could just sell insurance to all the people that were buying building materials from me, right? Like the lumber yards and the roofing supply yards and some of these distributors, if I could just turn them into insurance clients, that could be like a pretty successful business. So I thought I could port over those relationships.
Smart.
Yeah. Except that in the first year, I sold zero of them. Right. And I realized that, I mean, this is hard, like this is not a topic that people are super interested in talking about.
Yeah.
Most people don't, get excited about talking to their insurance broker.
Right.
Until
you start saving them a bunch of money.
Yeah, of course. And the relationships that people have with their insurance broker are typically really long term.
Yeah. I
mean, there's a secret about this business that, the statistic is that something like 90% of insurance policies, they just renew, right?
No way.
It might be high 80s, but at Lockton, the number is actually higher than that, right? We're sort of in the mid 90s. So it's very challenging to get people to change, especially when you're 23 and used to be selling these people nails, right? Like it's hard.
And you're competing with someone who's had a 7-year relationship and is 45 or something like that.
Sure. Not dissimilar to your business.
Yeah. Wait, so that's crazy. So when you talk to this guy and you reach out to him, is he sort of like pitching you on insurance?
No, I begged him to give me a job.
Really?
Yeah, I told him I'd work for free.
Okay.
Yeah.
So you were working with this guy and was he sort of like mentor mentee to you, or were you?
No, that's the funny part. He actually exited shortly after, right? So I was sort of thrown into it. It was hard.
And you stayed the course. Obviously.
I didn't have a choice.
Right. So then so question. When you start doing insurance and because you have to get your licenses, your property casualty, all these things, like you're like enjoying it, or you're just kind of like, hey, this is like how I can make money and I'm going to like keep at it.
No, I hated it because I was doing pretty well as a nail and screw salesperson. And, I had a gray BMW. I had, I was like living the 22-year-old dream.
Yeah.
I had an apartment in Brickell, right?
Yeah.
Water view, 2-bedroom, all this stuff. And then I go start at this insurance brokerage firm and I'm making $40,000 a year pure commission on a draw. Yeah. So I downgraded to a Camry. It was like, a big, tough. Yeah, whatever. I mean, but anyway, and all kidding aside, it was like a big step back for me, right?
Yeah, for sure.
So I'm like, okay, how am I going to sort of rebuild this and make a career out of this? Yeah. So it was really challenging.
Where do you feel like, okay, because obviously now you're, and we'll talk about it, but you're insuring the Waldorf Astoria, the St. Regis, like Bentley Residences, like almost all the biggest buildings in Miami or in South Florida. So like, how does your career accelerate so much from, I kind of don't like this. I'm grabbing my licenses, but like, I'm going to stay the course. Was there like a big leap in your career or like a big break or something?
There were a few. But I think the most simple answer is by working harder than everyone else for a really long time.
Yeah. Is that like you were like working weekends, or you were just super focused and like,
yeah.
Okay. So, and then what company did you get hired on initially when you started insurance? And did you like sort of hop around a lot, or were you like long-term at some place?
Yeah. So I worked at an insurance agency called Brown & Brown, which is a publicly traded company here in Florida that's been very successful. And, I was trying to sell insurance to anyone or anything that, moved. And in some cases, if they didn't move, that was fine too.
Yeah.
I mean, I've had some super interesting clients. I once walked into every scrap metal dealer in the Miami River, and I ended up getting 3 or 4 of them as clients.
Oh, no way.
We insured companies that made flour and baking products. I insured a company that did shipping. They shipped sharks and aquarium animals.
Sharks?
Yeah, they ship them on passenger airplanes from here. Like they catch them in the Keys. Let me take a step back. So there's like a demand in this global aquarium market for certain species of, fish, marine life, etc. Right? So for example, the shark that's in the aquarium in Singapore, right?
Yeah.
How did that get there?
Yeah.
Well, so these companies effectively place an order. There's a company in the Florida Keys that collects these, species,
or whatever. Yeah.
And then they ship them on 747s.
Whoa.
To, wherever it is that they're going around the world. And what's super interesting is that the value of a shark, or at the time anyway, maybe it was $20,000 to $40,000, but sort of the cost to ship it and do all of that was closer to maybe $200,000 to $250,000.
No way.
Right. And so the idea is that they get these 747s and they put almost these like jacuzzis in there, for lack of a better word, right? Like imagine like a big tub.
Yeah.
Right. And maybe there's 15 of those tubs or whatever the right number is. And they send
parts in there and they go.
Yeah.
That is wild. Yeah. So how do
you got to buy insurance for that?
Yeah. So to your point, like the total addressable market is pretty large in insurance.
Yeah. But I mean, look, for the first 3 or 4 years, I was just trying to figure this out.
Yeah.
And then after a few years, I started to have some success, but I realized that the most successful people around me were, more specialized, working on bigger deals, et cetera. So I left the company I was with. I went to go work for another company. And I decided that I was going to focus on trying to work with real estate owners and developers and marine, right? Because I thought I knew something about this from, shipping sharks and marine also means like cargo insurance and shipping. And, you think about Miami and those are two things that I think about water and buildings, right? Or maybe buildings and water, depending on the order. So, I set out to go do that and, quickly realized that marine insurance wasn't for me.
Yeah.
And that was, maybe 12 or 13 years ago. And I focused on serving real estate owners and developers ever since.
Got it. And then real estate, again, the decision came kind of plain and simply like real estate is hot in Miami. There's a lot of buildings. Let me try to insure them.
Again, I had no idea what I was doing. So I walked into every office building in Brickell.
Yeah.
Including this one. And I just walked into the property manager's office. I mean, you have to understand I was totally clueless. Like I had no idea that buildings like this one were owned by REITs or owned by, some firm in Boston. I thought, again, in my naivety, you could just walk into the office.
Where's the owner?
I didn't know, nobody taught me that.
As you're doing this, right? I mean, for me, it's like, I typically, when I'm sitting, across from someone here, they have like a mentor or something that's really helping them. Were you, not that nobody didn't help you in your career, obviously, but like for the most part, were you just like kind of figuring it out at the place you were at to see like how this works? How can I make money?
Yeah.
Whoa.
Yeah. I mean, look, I'm very lucky,
for sure,
like you and others, to have met a lot of people that, wanted me to succeed.
Yeah.
And some of those people are still clients or friends or just, people that have helped me along the way. But, at the end of the day, you got to get up every day and do what you do.
So like for me, for example, right, the reason why I have the clients I have is when I came to, well, not Berkadia, I was at Walker and Dunlop before, like my senior partners at the time service clients like Related Group. And then through servicing Related Group or helping them service Related Group, I can then use that and leverage it into other clients that then are my clients, like for the most part. Did you have a similar structure, not at Lockton because you came there with like a big team that I want to talk about, but before that where, I guess my point is like, how did you end up getting Related Group or like, these big clients?
Yeah. As I like to say, it's just a 15-year overnight success. Yeah. But, I, at least in this local market, did not have that. So the companies I worked with did not have a big presence or any presence of note in this space, in this market. And I thought that was an advantage. Okay. And I think it is, because I think that if you think about the world of insurance brokers, or maybe your world too, I mean, clients are getting saturated with phone calls, or, they're being approached at events. There's a lot of people, right, that are competitors. And of course, that's their right. And I thought that it would be interesting, to sort of pursue an industry that was newer for the company I was working at the time, because nobody would have ever heard anything from that company. Right. When I was in my first insurance job, it was sort of like a boiler room situation where there were like 40 salespeople in that one office, another, 40 or 50 or 60 in Fort Lauderdale, another 10 or whatever in Homestead. And we're all going after the same clients. Right. So clients were sort of used to hearing from maybe that company. So I thought that maybe if I went to a place that didn't focus on that specific area of expertise, I would have no internal competition. Right. And, it kind of worked, right? Except it was really, really, really hard. So what I did is I reached out to a bunch of people, right, that I was reading about in newspaper articles or, on the internet or whatever. And I did that for like 5 or 6 or 7 months and it didn't work. Right. Which was kind of terrifying because I just started this new job and I didn't really know how this would work out. And one day I was sort of like kind of down the dumps or whatever and annoyed. And I went to Zuma at the time with one of my best friends. And I'm just sort of sitting there at the bar and I was drinking something. And this guy, walks up and he was with like 3 beautiful women and he's got like this huge watch on. And I'm like, who is this guy? Right. And he starts like talking to me. He slaps me on the back. And he goes, "Oh, what are you drinking?" And I go, "Oh, I'm having like a Johnny Walker Black Label." I'm like, "What are you drinking?" And he's like, "I'll have one of those," or whatever. And then he goes, "What do you do?" And I go, "I'm in insurance." And I go, "What do you do?" And he goes, "I'm a real estate developer."
Oh, wow.
Right. And it turned out that guy was a guy that I had been calling and just hammering nonstop. And I had this like moment, right, from God or something, where I just said to this guy, it just came out of my mouth. I just go, you know, it's really funny. If you would have taken my call 2 or 3 months ago, I probably would have saved you $3 or $4 million by now. And that was my first client.
No way.
Yeah. And still is a client.
Well, that's a big line. When you say something like that, the guy's like, all right, well, I'm definitely going to call you back.
I mean, it was true.
That's,
you know, so there's one thing to say it and.
Yeah. And then to go and.
Yeah. Look, I mean, yeah.
And then so when you go and get a big developer client like that, right? How you then leverage that to get more.
Of course.
Right? Like clients of that nature, so to speak.
Yeah.
Okay. So when you're doing that, like if you've never insured, let's say this guy's a real estate developer and is doing a big building. Like if you've never insured a building like that, it's like figuring out how to insure it is less of an issue as like getting the client or like
figuring out how to insure something and figuring out how to insure something well are two very different things. Okay. Yeah. So, not all insurance is created equal.
Right.
Not all insurance brokers are created equal. Yeah. You know, there's a wide delta between sort of best in class execution and not.
I know right now you're like insuring the Waldorf Astoria that I'll ask about in a second, but was there a building that you feel like when you were in your late 20s, mid 30s or something like that, you were like, hey, like this is like a big deal for me and it's really going to put me on the map and help me to kind of leverage that into more.
No.
It was just little by little.
Get anything. Yeah.
Yeah. Okay. So that now.
No, I mean, insuring a building like that or any building in Brickell was an idea that I could not even comprehend. Yeah. Quite honestly.
Yeah. I could imagine.
Yeah.
So now, for example, I don't know if you know this, but my partner Jarrett actually sold the land to PMG for the Waldorf Astoria. So there's a little connection between us there, which always. Every time I'm working with a client, there's a connection because you insure them in some capacity. It's crazy. So the Waldorf Astoria, it's, you know, the largest, super tall that's going to be built in South Florida, in Miami, and like the history of Miami pretty much. And you're insuring that. And for me, I can't even think to imagine how you start insuring a building like that. Like, where do you even start?
From the beginning.
Yeah. So I guess tell me, I mean, how does that work? Like, I'm assuming it's just not one insurance company that insures the whole thing.
No, it's not one insurance company. There's probably, there's an excess of 40 insurance companies.
That's insane.
That, participate to insure that building. And look, the bigger these deals get and the more complex they become, right? There's not one insurer that wants to take that kind of risk, right? So almost like a large loan, right? It's syndicated. And arranging that insurance is, that's what we do best.
Yeah.
But, you know, there's a lot of other factors and a lot of stakeholders involved, right? Mm-hmm. Not only is there the developer, but, you know, they may have investors. There are lenders. There's contractors involved building the building. There's subcontractors. There's all these parties that need to be adequately covered and insured, and they all have insurance requirements, and all those things are negotiable. So, I mean, that's a multi-month process.
Yeah.
And yeah, that kind of stuff, it requires a lot of work and a big team.
Is it kind of like for me, I'm assuming it's different. For me, selling a $50 million building is very similar to selling a $200 million building as it relates to like the work, right? I reach out to buyers and I make a market. For you, does the complexity like tenfold or is it kind of similar to my business?
I think that the complexity scales with the size of the building. That said, there is some baseline amount of work, right? So where time is better spent working on, you know, larger things. Yeah. Because there is some sort of opportunity cost.
I mean, my listeners will kind of understand how little I know about insurance realistically to the extent, obviously, that, you know, but like it's my takeaway when I deal with you and John Perillo, you know, one of your partners, is you guys are super, super, super responsive. Like we ask you for something and immediately you're like emailing back, giving me like quotes, like this is, and like guidance, right? Which is very helpful. So obviously we just keep going back to you guys, right? But how do you make it irrefutable that you're working, you know, that you can add more value than the next guy? And I'm sure that's like a very tough question to ask because there's a million different ways, but like, what are some things that jump out at you?
So your question is, how do we,
like, how can you say,
how do we in a commoditized business, you know, specialize and provide what we think is outsized value to our clients?
Correct.
Okay. I think it's a multi-part answer, right? Correct. It's a complex question.
Yeah.
I think the first thing, and this may sound cliche, is just by relentlessly focusing on their best interests, not ours.
Yeah.
I think the second thing is that we understand what these people do, right? Lockton is a big company. We insure hospitals, we insure aviation firms, we insure private equity firms, we insure real estate, right? And I think no matter what industry you are in and whatever role you're in, the most important thing as an advisor is to understand how whatever it is that you do fits within the world of whoever your counterparty is. Right. So we understand the needs of real estate owners and developers. We understand your needs.
Yeah.
We understand what you're doing and how that fits into that owner's needs. And we're trying to give you the right level of insight in an extremely responsive and efficient, timely fashion so that you can deliver something good, right, to your clients, and which quickly helps you and it helps me.
Yeah.
Right. And that answer may be different because everyone's objective is different.
Yeah.
Right. Some people want to save the most money. Others, need to get something done very quickly.
Yeah.
Others are trying to appease their investor, right? We have to understand what the objectives of our client is. And I think that skill is super important.
Yeah.
In terms of like some of the secret sauce on the execution. Yeah, it gets deeper, right? Whether that's negotiating with a lender or getting into a tough discussion with a contractor to maybe change a requirement that our client feels is unfair, right? Those are all things that kind of get into the second and third order effects of doing what we do. So I hope that starts to answer your question.
That's incredible. That's an incredible answer, because even as you're saying it, I am like nodding, because every time I reach out to you guys, it's not only the responsiveness, it's like, exactly what I'm looking for, and you or John immediately reply and give me the detail as to why it is what it is, that then allows me to go to my buyer or my seller and be like, look, this is, exactly.
Maybe that's a good one there. Maybe the answer is that it's our job to give you whatever information you need to make the most informed decision.
Correct. Yeah. And then inform my counterparties, right? And it seems like I don't have to explain to you why I'm asking what I'm asking. You're like, no, I know why you're asking, and this is why, by the way. It's not just the answer, it's the answer and the explanation that then allows me to inform my counterparties.
But look, this is like, this may sound ridiculous, right? But this is just the difference between specializing in something and maybe being a generalist, right? Like, you probably want a brain surgeon operating on your brain, right? That's not to say that the orthopedic surgeon isn't a brilliant surgeon and probably amazing and has years of education. But when it comes to brain surgery, I probably want, someone who specializes in that 100%. Doing it, right? 100%. And so, I don't know. I'm not suggesting that we're brain surgeons, right? But I am suggesting that we're specialized in our field of insurance.
Both you and I, which, by the way, some of the most money I think I make is when I quickly tell people no. They reach out with an opportunity. I'm like, this is not for me. This person can help you out with that. I need to focus on what I can add the most value in, because some people just reach out randomly like, hey, I know you can help. And I'm like, let me introduce you to the specialist, of which I am not in what you're asking.
Yeah. And I think what we've discovered, and the reason that we've been able to be successful, and is that, there is a market, to sort of specialize in the real estate industry, not just in Florida, all across the US. And help owners, developers, asset managers, folks like yourselves with this type of knowledge. And I think insurance has become such an important part of, deal making, especially with the run up in prices over the course of the last few years, that, it really pays to have someone good in your court.
Yeah. So let's talk about that, right? From my perspective, right? I remember when insurance and selling multifamily buildings was, $450 per unit per year.
Yeah.
And then fast forward, and there's insurance quotes that I'm getting or financials that I'm receiving from my clients where the insurance is $3,000 per unit per year, right? And people put 3% expense inflations on their projections, not 50% expense inflations on their projections. So obviously you can explain it better, and it's what I want to get into. But there was a moment in time, I don't know if it was 2021, 2022, but insurance was increasing like 50% year over year. And then now it's sort of coming back down more or less. But like, explain to me, I guess, kind of why that happened, why it took off in 21 and where we are today.
Yeah. So 2 words for you. Hurricane Ian. The hurricane in Florida that hit the West Coast a few years ago sort of created a perfect storm, no pun intended, of circumstances that resulted in the insurance market really just drastically changing in Florida. And you saw people go from, like you said, 800, 900, 1,000 a door, whatever it was, in some cases to 4,000 or 5,000 a door.
Yeah.
And in many cases, clients couldn't even get insurance. What people forget is that insurance is cyclical, right? In the years before that, prices had sort of gone down. But this has happened before. It happened after Hurricane Andrew. It happened after Hurricane Katrina, et cetera.
Yeah.
But what was super interesting about this is that it happened in a time where interest rates were high, right? And, all of a sudden you have insurance companies reevaluating their portfolios and reinsurers saying, hey, I can make however much, 4 or 5% risk free.
Yeah.
Why am I going to take all this risk?
Yeah.
And insure these buildings in this place where we just got wiped out for 1% or whatever the rate was. And, as quickly as it went up, almost as quickly, it started to crest.
Come back down.
Right. So now you have, insurance prices that for the last couple of years have dropped, maybe 20 or 30% last year, maybe another 20 or 30% or more this year.
Yeah.
And, I think that will continue because there haven't been that many storms or sort of issues, even the wildfires in California, which were a big deal, right? An enormous economic loss, weren't that big of an insurable loss, right? Because a lot of people don't have fire insurance in California, or they can't get it. So you think about Ian, it's this enormous insurable loss. Then there's a few good years. Carriers start to come into the market. Competition is created. Prices are being driven down. And then you're in this interest rate environment where interest rates are dropping. Yeah. So all of a sudden you can't make all this as much money risk free. So, you're focused now on your underwriting profit if you're an insurer, right? And you're just going to see, I think, a continued softening of the market.
Good.
Barring, of course, we're still in hurricane season, right? Any sort of outsized events.
Yeah, you got to timestamp it as of October, whatever, 24.
Yeah,
we're still good.
Yeah. 11:21 a.m.
Yeah.
Right.
So this is interesting. For me, how I think about insurance is a big storm comes, right? And then price, there's insurable losses, right? And then a lot of carriers leave the market. I'm assuming carriers may go bankrupt with Ian and all these things. Now there's less of a supply of people that can put out insurance. So there's pricing power to the people that remain in the insurance, right? But I didn't know there was a correlation with interest rates and if insurance rates are going up or down.
Well, insurance companies are involved in a wide range of business activities. You know this, right? I mean, they own buildings. Yeah. They insure buildings. Correct. They lend money to people that are building buildings or own buildings, right? So they're playing across the spectrum. Mm-hmm. So
generally, if interest rates are going down, because they can't get the yield from whatever, a bond, then they're more incentivized to potentially go and insure, for example, in Florida. Like, it's not a one-to-one correlation, but generally, if interest rates are going down, they want to insure more.
There's a correlation. I can tell you what the exact ratio is, right? Yeah. But I think there's underwriting profit, right? Meaning how much money did we collect and how much did we pay out in claims, right? And then there is profit from investment in other business activities, right? And I would think that, as a large publicly traded insurance firm, if I was in that position, right, I would be weighing that very carefully.
And then is insurance also, like, for example, when Berkadia and my mortgage banking partners go and get a loan, right? They're like, hey, right now, Bank OZK is like the most aggressive with construction loan pricing. So like, let's go to them. And we know that because we're in the market. With insurance, is it similar where, you can understand, hey, these people are insuring at a good, rate with good limits? How does that work? And
for sure. I mean, and again, this is where being specialized helps, right? For example, right, in the construction insurance market, specifically for condos, specifically in Florida, right? There's less than a handful of insurance companies that are interested in writing the first layer of that risk, right? And companies that were doing this a year or two ago are no longer doing it. There are new entrants, et cetera. It's our job to stay in front of that, keep our clients informed, give them the right advice. So just like any other marketplace.
Yeah. Can you, just because since I have you here, explain kind of the layers of insurance? So like when you look at a Waldorf Astoria, like how many different policies, are there, and how many different, because like the construction lender needs XYZ insurance limits. Is that typically the one that drives the tail that wags the dog? Or is it like, no, it's also the GC and it's also subcontractors? Like how many different?
Yeah. I'm going to apologize to all the viewers here because I'm about to bore you to tears. But
Please do. Please do.
Sure.
Yeah, I want to hear about this.
So I'm going to grossly oversimplify this.
Yeah.
There's a handful of types of insurance policies that you have to think about, right? You have to think about damage to the building.
Yeah.
You have to think about damage that construction of that building or construction related activities could cause to other third parties, for example, people on the street, the neighbors, etc. And there's different insurance policies that can treat that. There's other risks too, like pollution or release of pollutants. There's other risks too, like design risks or risks associated with professional liability, maybe from the architects, engineers, or consultants, et cetera. So there's all kinds of insurance policies that exist. Lenders are generally focused on making sure that their, investment is protected, right? That they're deploying their capital efficiently and that there's some kind of backstop in case things go sideways.
Right.
So they put out a list of insurance requirements, right? Similarly, contractors also have an enormous amount of risk. They're the ones building these buildings. They also have insurance requirements. And all the other stakeholders in this value chain have their requirements. So it's our job to aggregate that, and because we're representing owners and developers, advocate on their behalf to right-size those requirements so that it actually makes sense. And once we've done a good job of sort of assessing that, right, we then go to the market for each one of these various insurance policies.
Do you have, I don't know if this is an easy or tough question to answer, but like for the Waldorf Astoria, like how many policies are there? Is it like 4 or like 500? I just don't know.
There's like upwards of 40.
Whoa. And you're basically kind of like pushing and pulling and negotiating.
Yeah. I mean, generally speaking, probably not dissimilar to like a syndicated loan. Right. There's a lead generally. Okay. And then the rest of the carriers fall in line for that given risk. Sometimes there's multiple carriers that share that lead, right? It just depends on what's going to achieve the best result and the specifics of that project.
Right. So it's 40, and I'm not quoting you on 40, but like, let's say it's
upwards of 40.
Yeah. Upwards of 40 for the Waldorf Astoria, but like one policy would be the liability of like property and casualty.
So there's a general liability policy that covers bodily injury and property damage to third parties. There's something called a builder's risk policy, which covers, the building itself as it's being constructed, right? The physical asset.
Like if a crane falls, that's builder's risk or no?
It may be. So think about it, right? And that's a great question. During Hurricane Irma, there were 3 cranes that collapsed in Miami. And in those cases, multiple insurance policies are triggered, right? There was another crane that collapsed recently, unfortunately, in
Fort Lauderdale,
Tampa.
Is it? Or in Tampa?
Yeah, that as well. But I was thinking as a result of hurricanes. So, but yes, there was another one in Fort Lauderdale.
Yeah.
But in that case, right, there's a lot of things that are going on. Right. So there's damage to the building and to the crane, right? The project may be delayed. Some of that may be covered under a builder's risk policy. There's also damage to others, right? Maybe the crane falls on another building, or maybe unfortunately someone on the ground gets hurt or property is damaged. That's the liability policy, right? And so the interplay of how that all plays out.
Dude, that is brain surgery. That's a lot. So then like something happens and then there's also like finger pointing on like who actually covers what happened.
Correct. Of course. I mean, these policies are a contract.
Yeah. And then there's also, I'm assuming, does it ever happen where there's a casualty, something happens and like it triggers 2 policies and these people are saying who pays most of it, of what happens?
I mean, there's many examples like that. The most famous or infamous one would be the collapse in Surfside, in which dozens of policies and parties were implicated. And there was a settlement that was, $1 billion, right? From 24 or 25 different, parties.
Yeah.
So that's one example, but any type of complex dispute or construction defect or, tragedy of that nature generally involves many insurance companies and many parties.
Yeah. Man, that's wild. Yeah. It's funny. I don't even it's what is it? You don't know what you don't know type of thing. That's where I'm at with insurance. Yeah. For me, we had Matt Ferrari on as a guest and he's like, great multifamily investor that I'm sure you know. He said something interesting where he said, we were super hyper focused on insurance in, 21, 22 on the run up in prices because we quickly realized taxes are your biggest expense in real estate for the most part in most places. And insurance is your second biggest expense. And like we mentioned, 5, 6, not even 8 years ago, insurance, I don't want to say it was a rounding error, but like insurance was in line with like repairs and maintenance and like contract services. Now insurance has 3x or 2x. So it's like, if you can manage this and hire Fred Zutel to like help it go down, like you could add profitability to your assets, to your investors, et cetera, et cetera, et cetera. So I remember him telling me he was like working with FEMA to get properties out of a flood zone because they were like maps that were dated in the past that you can like update. And there's real value that you can add with your second largest expense in an existing asset.
It goes back to something we said a few minutes ago, right? It's important to have and maintain and create great relationships with people.
Yeah.
But at the end of the day, the most important thing is execution.
Yeah. Yeah. So something I want to talk about selfishly is you were at another brokerage, insurance brokerage shop, and then you came over to Lockton with like, how many people more or less?
About 30.
About 30 people.
Yeah.
And out of curiosity for me, it's like, talk to me about like scaling and building such a large team, right? Like I'm specifically on like a 6-7 person team, right? And we're like, I'm thinking, what's the next best hire, right? Is it an executive assistant? Is it an analyst? So it's like, when did you start scaling a team and how did you kind of figure out what was the best way to grow it and what type of people to hire and things like that?
Yeah. I mean, I think that, there's this like progression in business, right? That sort of occurs, where, you know, maybe like in my world, I was an individual contributor. I had clients. I was trying to sell insurance. I was part of a company, and there were multiple other salespeople like me. And I think what I realized is a few things, right? Number one, I felt that the market was underserved. Mm-hmm. I mentioned to you before that there weren't a lot of people specializing in this. I didn't see a lot of internal competition. I didn't really see consolidated external competition, meaning I felt the market was very fragmented, right? There were dozens of insurance brokers. There wasn't like one broker where everyone's like, hey, this is the guy, you know, the person.
And my business was like four teams, 5
right.
teams.
And so maybe that did exist, but I was too naive to see it. I don't know. Right. And so I became pretty successful. I realized that there were only so many hours in the day. I think this happens to anyone, especially if they're like sort of in a consulting or sales type role. Yeah. I think at some point, the job becomes so big that you can't finish your homework every day. Like you can't respond to every email. You can't answer every phone call. And then it's this question of like, okay, am I leaving stuff on the table because I didn't get back to that person? Yeah. And I really pride myself, and we pride ourselves on trying to get back to people like instantaneously. Right. We think that's super important.
Yeah.
Because people want to feel heard. Yeah. Right. And they're not reaching out to you to talk about the weather. Yeah. There's a problem that needs solving. Right. Maybe they are talking about the weather for hurricanes coming or something, but you know, insurance.
With you, they're calling you about the weather.
Yeah. Yeah. But so anyway, so I saw this opportunity. I felt that, you know, there were brokers, that really focused on smaller risks. There were brokers that focused on really big risks. And I felt like sort of this middle market or this upper middle market was really underserved. You had these global firms that maybe, weren't offering us customized or responsive solutions, or maybe, you know, the expertise didn't quite fit the box of the unique situation of what was happening in Miami. And then you had the smaller firms that didn't have the capabilities. And I felt like I could occupy sort of the space in the middle. Yeah. You know, and I started building teams to that effect. And, you know, I would just stay up late at night and message people on LinkedIn, or I'd call people that I used to work with. And I, ended up hiring probably 40 or 50 people over the course of a 2 or 3 year period.
2 to 3 years?
Yeah. And so we scaled that well. And then one day, I go to work, and the company that I was working with, decided that they were going to merge with another big global company. And, that was not what I had signed up for. Right. If not, I probably would have worked for that other company to begin with. And, you know, there was a lot of change and a lot of uncertainty. This was during COVID. So, you know, kind of a crazy time. Yeah. And I decided that I was going to leave, and, you know, the rest is history. I left in 2021 to join Lockton. And, you know, a lot of other people also left. Yeah. And it turned out to be the greatest professional move that I've made to date. And today, you know, there's over 130 of us in Florida, right, focused in this space. And, you know, I'd like to think that we're one of the, if not the leading insurance broker in this space. And I think that there's a lot more room to grow. And our clients are not just here in Florida, but they're all across the US. And we think we have a unique story to tell. Yeah, no, that's incredible. And also being what the largest privately held, independently owned brokerage in the world, insurance brokerage in the world. I'm not going to forget that. That's great. Yeah. I mean, look, it's it's a great story.
Yeah. So for you also, when you're growing a team like this, right? Like I'll talk, just to give you an example, like my team, right? We are 3 producers, call it 3 analysts and 2 like transaction managers, right? So 8 people, right? And in like just my microcosm, obviously you're the president of Lockton. So there's like different groups, different verticals and stuff like that. But when you were sort of running your specific practice, call it, what's the ratio of like producers to like people that underwrite and execute?
It's a great question.
You know,
so it depends on the firm, right? I mentioned to you that one of the companies I worked with had, 40 or 50 salespeople in one office.
Right.
In our Southeast operation, which is, hundreds of millions of dollars in revenue, we have about 40 salespeople in total, right?
Whoa.
So, we prefer to focus on fewer, very high quality, advisors, right? That are trying to solve big problems for, clients that fit our ideal client profile, right? There are other situations, right? Where, if you think about maybe homeowners insurance or, other brokers that are focused in different spaces where maybe they have dozens of salespeople, but the average case, if you will, is very small.
Mm-hmm.
So, we try to overstaff to where the folks that are servicing accounts maybe only work on, 10 to 12 accounts.
Mm-hmm.
As opposed to some other firms that are focused on smaller things where maybe one individual is working on 100 accounts.
Yeah.
Right. Because again, there's a level of specialty involved.
Right. More white glove like work.
Yeah. And again, bigger clients, bigger issues.
Yeah.
Right. And more personalized attention.
Yeah. That makes a lot of sense. So something that I'm curious about is talk to me about like the insurance business model from like a broker's perspective. I'll explain mine to give you a frame of reference.
Okay. I'll do my best.
Yeah. But for me, for example, I sell land and I sell buildings. So I'm running around, right, trying to find clients that own land and own buildings so they can give me a listing so I can sell them. But in my case, sometimes I go and, chase and try to add value to a client for 3 years because they've got 3 buildings. Then they hire me to sell those 3 buildings. I sell those 3 buildings and I sell myself out of a job pretty much. The good thing in my business is that then whoever I sell those buildings to will likely hire me to then go and sell the building for them again, since they're investors that are like buying and selling buildings, right? So, and then I'll talk about just Brickell more generally. I know you know this, but just for the audience, it's I go and sell a building for $100 million. My mortgage banking partners go and source the acquisition loan for $70 million. And then we make a fee of the sales commission. And then we also make a fee on the loan origination commission, right? And then there's servicing, which is more complicated, so I won't talk about it. But walk me through that with insurance, because my understanding is that it's a pretty good, like, it's a snowball type of business. I may be wrong, but if you could explain the insurance business brokerage model.
Sure. And in fact, I failed to mention this earlier, but I was walking you through the example of why I wasn't a stockbroker, why I wasn't a realtor, all that stuff.
Yeah.
A big part of it, the reason I never became a life insurance broker is because, you weren't really building an annuity. To your point, you're starting over every year.
Yeah.
So I think, like any business, there's recurring revenue and then there's non-recurring revenue or transactional revenue. So transactional revenue in our world might be something like, a developer building a new project. It could be a company buying another company and all the insurance associated with that type of transaction, et cetera. And recurring revenue would be, for example, the insurance for this building, which renews every year. We're paid on both, right? So it's important, I think, to have a sustainable business to where, there's a significant amount of recurring revenue and you build a base of clients, right? Whatever business they're in, whether that's real estate portfolios or whether that's, manufacturing firms, or I gave the example of aviation earlier. And then I think, there's this whole side of it to where you can be attached to transactions, and having a good balance of both, I think is really important.
Yeah. Yeah. Cause my understanding is, for example, the Waldorf Astoria, you insured the Waldorf Astoria because that's a condo building. Is there any recurring revenues for the condo side of that once it's built, or is that not?
Yeah, of course. I mean, look, if we insure a building, a construction project, and then that turns over into a condo association, right? We're the broker for the condo association. Of course, we have to fight every day to keep that client happy.
Correct.
And that might be different than if, if instead of it being a condo, it was an apartment building that's owned by the same company that built it or gets sold, right? Yeah. So we view that as opportunities to build new relationships with new people, right? And just try to deliver the best service we can.
Yeah. Interesting. So, and then you guys get paid a percentage of the premium of the insurance policy for the most part?
Yeah. Generally speaking, the insurance companies pay us a percentage of premium of whatever the total premium is.
Got it. Okay. Understood. Yeah. Again, so I think your business has this annuity aspect of it that mine is more so like January 1st. It's like, where's my pipeline and to go sell buildings?
Well, you got to keep the client.
Yeah.
In order to get paid.
For sure. I'm not saying,
so, So that can be,
you don't just go to bed. Yeah. You don't ride into the sunset for sure. Okay. So that's that.
I don't play golf. So, you know.
Oh, you don't?
No.
Okay. Me neither, actually.
Yeah. I might be the only insurance broker you've ever met that doesn't play golf.
You're like, all I do is add shareholder value to my clients. So something that I'm interested in and kind of want to wrap up the conversation with, unless there's like specific things you want to bring up, maybe any deal specific things. I know we talked about Waldorf Astoria a lot, and I'm sure you've got a lot of deal stories, and I'm happy to chat about any of them. But for me, it's just sort of like your grit and like where kind of, you know, your motivation comes from and things like that, because you've been working. What was the first job? It was besides working for your father when you were a teenager, it was
that's child labor. I don't think we're allowed to talk about that on this.
Exactly. But then you were working at a grocery store, you were selling nails, and like, where do you think that kind of grit comes from, and how do you keep it alive today?
Oh God, that's a good question. I don't know. I feel like I wake up with the same sense of urgency every day. Like that hasn't changed. You know, I'm not trying to ride off into the sunset. I'd like to think, and I hope you'd like to think that, like the best is yet to come for me. Like I haven't achieved the best thing that I've achieved in business yet. My life changed a little bit recently. I had a daughter 3 weeks ago.
Oh wow, congratulations.
You know, so that's kind of making me evaluate some things. But I think for me, you know, work is a part of life. I find a lot of fulfillment and enjoyment from work. I love helping people. I genuinely believe that I'm working in their best interests, and I hope that I've made their business better. Anyone that I've interacted with, whether it's a phone call or a long-term client. And I get really excited about that every day. So in terms of like the grit and determination thing, I think it's easy to be successful if you do something that you believe in. You know, there have been situations where maybe the circumstances changed and I no longer believed in what I was doing, right? Maybe it was a company I worked for that changed something about it. Or maybe it was, you know, when I was selling nails and they sold the business, I no longer believed that was the best place for me. And therefore I wasn't as good at it. So I think that's really important. And I think the other thing I'd like to maybe just talk about for a second or two is sort of this idea of like work-life balance, right? Like I think you can have a balanced life. And I think you can have it all, right? Like I think you can have great relationships with your family. I think you can be super successful. I think you can, you know, be sane. And I think it's important to keep all that in balance.
They're not mutually exclusive.
Yeah, for sure. So, you know, look, but it's work is not spelled F-U-N, you know? You know, everybody's got to find their purpose.
And this is your first kid, first child. Yeah. That's incredible. Congratulations.
Thank you.
That's huge.
So we'll see. I mean, maybe that'll change some of the way that I view the world, but, I know it will.
Do you feel like you were like this from an early age? Like when you were working at a grocery shop, when you were selling nails, were you like, I want what's, you know, best for the client. I wake up with urgency.
I mean, when I was working for a grocery store, I was cleaning toilets. So I just wanted money,
right?
You know, but,
and then do you feel like was it a conscious effort when you were in your 20s and stuff like that?
But those toilets were really clean. Okay? They really were.
Those are the cleanest toilets in any grocery store.
They were.
Yeah, I love it. So did you make a conscious effort in your 20s to like really lean into like, you know, were you a super social kind of people's person like growing up? Did that come easy to you? Or is it like, hey, no, I focus on my business and as a result of that, you know?
Yeah, that's a good question. I mean, no, I wouldn't classify myself as like a social butterfly in any way of the term. But you know, no, I think I had like on that spectrum, I'm probably pretty normal, right? Like so I don't know.
Yeah. Something that I want to ask about is there a difference between, cause you talked about the insurance market being cyclical, right? Is there a different cyclicality to like existing multifamily properties and like construction loan insurance, or they kind of ride the same wave?
I think that there's sort of the global insurance market, right?
Yeah.
And aggregate trends, right? Just like there is, with banking and finance and other things. And then there's industry specific or product line specific variances within that space, right? Like, for example, auto insurance in Florida has been and is in a very difficult place for a very long time, right? Property insurance, right? Rates went up. Now they're coming back down.
Yeah.
Construction insurance and insurance for operating assets are different, right? There is some correlation.
Yeah.
But for example, condo insurance, right? If you are on a board or you live in a condo, you should see those prices easing. But if you're building a condo, right, given all the aggregation in South Florida, that's a pretty challenging market in which to buy insurance. So there is not a one size fits all answer.
Yeah.
You can get a bunch of points on a graph and draw a line and do it, but there's still
if you zoom in, there's some other cyclicality to it. So question, do you see the same way that you can't underwrite 50% growth in insurance in perpetuity, 2021, 2022, like clearly it was going to come around. I don't think you can underwrite 30% decreases in insurance in perpetuity. Where do you think we are now going forward? Like, if I'm buying a multifamily deal today, should I be underwriting flat, kind of down for an existing multifamily property?
I think you need to speak with someone who understands the specifics of the asset that you are trying to underwrite, right? Which, I'm sure we can share my contact info or whatever, to get a real answer.
Yeah.
Because, look, it's different in Orlando than it is in Tampa than it is here.
Yeah.
By the way, it's different if it was built, in 2020 versus, right.
Yeah.
So all these variables matter.
Yeah.
That said, I think, insurance prices for stabilized assets are easing.
Yeah.
I think that should continue, knock on wood, right?
Yeah.
We are still in hurricane season.
Yeah.
Things could change. But if the status quo kind of remains, I think you'll see a continued softening of the market.
Good. I love that. And then my final question is, what would you tell, this is everyone's favorite question. If you were in your early mid-20s and you look at Fred and you're like, dude, that guy is crushing it, and, I aspire to be someone like him, what is some of the advice that you would give your early mid-20-year-old self?
I would say work harder than everyone else.
That's it's like, no matter what you do, that'll get you ahead, and that'll put you in the 1%.
Yeah.
Yeah.
And things don't always go according to plan.
Mm-hmm. And if it doesn't, just keep working harder. I love it.
There's things you can control and things that you can't.
Yeah. Fred, if somebody wants to reach out, whether it be insurance related or please hire me related, what's the best way to get in contact with you?
My phone number is 305-606-5436.
Whoa, I love that. Yeah.
And I can also be emailed fzutel@lockton.com, but we can
It's
share
Zutel at Lockton.com?
Fzutel
at Lockton.com. Fred, I can't thank you enough for the time. I know you've got a million buildings to insure and probably a bunch of phone calls and emails to respond to. So I really appreciate you being here today.
Thank you. Appreciate the time.
Thank you, brother.